And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 index for Thursday, June 3rd, 2021. Market began to throw a couple of curveballs at us today. And in terms of the count, I'm not really going to change the count for the S&P as I did for the NASDAQ. And the NASDAQ is really just, I switched it because it just seemed to work out better for what's happening versus what we're expecting to continue to happen. Now, the same thing may be found here in the S&P, but right now I'm holding to what the method or where the count that we're using. And in that count that this is turned into a double ABC, where this is the first ABC separated by an X wave, and then we got the A and the B, and now we're dropping in a C wave. Now, the market reached support today at 1.236. So that's where it would be, wave C would be equal to wave A at 1.236 times the wave length of wave A at 4,166. It got down to 65.25, I believe. Come on, just move it over. Yeah, 65.25. And then it put in a decent rally. Now, I want to take off that, the Fibonacci there, and so that we can take a look at the internals, because that's where I think we're going to get this separation between the NASDAQ and the S&P. The NASDAQ, I do expect, has a very strong possibility of continuing to decline and drop about 100 points from where it is, below its today's low, which is at 13,462. And I'm thinking that it could really get down to 13,420-ish. Now, if I had to say the same thing is going to happen here, then this is going to change how this whole thing is being viewed. And in that case, I would have to take all of this back and move this minute wave one here. And that suggests, if I do that, that wave one is a three-wave pattern. And that would suggest that the remaining balance of wave 2, 3, 4, and 5 would all be three-wave structures, or some form of three-wave structures, but it's going to wedge its way higher as we move up to the ultimate top. Now, again, it's just taking into consideration the degree of what we're completing. We are moving up in a minor fifth wave to complete an intermediate fifth wave to complete a primary third wave. Now, that's pretty big when we pull it out and have to realize how long that primary third wave has been moving up. And it's been quite a while. So if that's the case and I need to move that to there, then this would then definitely be best counted as this being the completion point for the second ABC, puts in another X wave, and then starts to drop in a C wave. But even that is not really fitting because of this rally that the S&P did off of this morning's low. So no matter how I want to count it, even if I said that this completed the C wave, that's the next wave, 1 of C, 2 of C, 3 of C, 4 cannot overlap 1. So either that, if I can do that, it's still going to put the completion point of this third ABC right there. And therefore, I am not convinced. So I'm going to, I may say this is 1, that's 2, and that's 3, 4, and 5. So that fits much cleaner to me and puts that as a complete pattern. And so if that's the case, because of the rally, I would anticipate that the market may drift back lower a little bit, but it should not drift to new lows if indeed that this is going to be wave 1 of the next sequence up. which in this case, we're either looking at a minute 5 or a minute third, but either way, it's a rally and it should pick up some steam as it continues higher. So I can throw on some very, let me just see if I can pull this up a little bit. Yeah. And go down to my drawings, and I want to put them on just retracements rather than extensions. So what I will do is see if I can't, come on, be a good friend. We're going to go put those on, and we're going to go up to this high, 402.50. So wave 2, it already had, if this indeed is a wave 2, it already has come down to 382. The next most common is 0.50% of the first wave, and that's at 4184, we're going to call it. Can it come 618? Absolutely, it certainly can, and not be unusual, and that would be 4180-ish down to 79. So we have the zone here that if the market wants to continue to pull back, I don't think it should drop below these levels. If it does, then it's turning into something different. And we're going to have to go back and take another review, and we're going to have to take a look at really what's going on. This particular corrective wave that both the S&P and the NASDAQ have been tracing out now for over a week is more difficult because it's taking a more complex structure, complex pattern. And so it keeps throwing curveballs. And so we will continue to work it and determine as to what are you doing, S&P, and where are your intentions and what are you going to? And in the meantime, we put together an upside scenario and a downside scenario. And so right now, the upside scenario is that it's going to go and continue higher, going to break above 4,202.5 and just keep on going. And it needs to get itself above this level, which is 4230. And it needs to then start heading up towards 4238 and start breaking to new all-time highs. That would give very strong support that this corrective pattern is done and the next advance is in place. And whether that is a minute 5 or a minute 3 will determine later. But right now, this is the scenario that's going to give us the support needed that the correction's done. So break above here, break above there. We're getting pretty good, strong indications that the correction's over and we're into that next advance. And if the market first comes down and starts to test this level, these levels here, then the small wave 2 would be complete, hopefully. If it breaks and starts to break and it goes past 4165.25, today's low, these are the levels. And all I did, folks, is I just ran Fibonacci's on a retracement plan, a retracement button versus an extension. So it's just doing a retracement of that rally that it put in. So if it comes down here, these are levels that should hold, but it's not going to be a retracement of this. It's going to be a different pattern, but we continue to use the same levels. So we can use those as support. But I would then have to go and tear this whole thing apart and see what's going on. So we now have a little bit of upside. We know if the market starts to move, what we can expect. And we can start to put in Fibonacci's on that level, but they're going to be extensions. And so let me get rid of that. And those extensions are going to be more, I'm going to go out to this one. Oh, I don't need the daily, I just need the hourly. So we're going to have to, if indeed it's going to be a fifth wave up, again, we would draw the extensions, and we would, because wave 5 would be related to wave 3. Come on. My computer's being a little fussy lately. Doesn't want to pick up what I'm trying to, oh, good. Extensions, good, put it there. I put it to wave 3, and then down to, and we're just going to use this like it's not going to go and make a new low. And we'll put it right there. And so you can see where we should start to head, at least up to this level, at least up to that level. And then we're starting getting into new high territory. And that would be the ticket. So that would be the extensions. And the other one was just for continued downside. And so that's where I'm going to leave it. I'm going to wish everybody a very good trading day tomorrow. And please remember, we trade what's in front of us. So we have parameters that we can put around it, which we attempted to do here in the update, but we must continue to trade what's in front of us. Otherwise, we can get buried. We're coming in. If you're wrong-footed, you take a step back. You take a look at what's going on. You see that the markets are going to head higher or they're going to head lower. You start to work with your moving averages. That's going to be your guide. So we have Fibonacci resistance or support. We have an Elliott count, which helps to give us some guidance as to what we can expect. But we always revert back to the market to determine what and how am I going to trade this? Because you're going to trade what's in front of you. I'm not going to go in tomorrow and say, well, I expect you to move higher. So I'm going to buy and buy and buy as this thing just sinks. And you're buying it on the anticipation it's going to go up instead of trading what's in front of you because the market's going down and you don't want to blow out your account. So again, trade what's in front of you. Use the support, use the resistance levels, and use your moving averages. Hope everybody has a great trading day. The next update will be on Sunday, June 6th.